Users of financial statements. Financial statements are prepared by following proper accounting process. These financial statements are used by various users for different purpose, such as business owners or shareholders. The major users of financial statements of businesses include sole proprietor or partners or shareholders. The financial position of the company is communicated to the shareholders through the financial statements, which state the profit gained or loss suffered and the value of its assets and liabilities. Prospective investors also use such information to take decisions about their investments in companies. In case of listed companies, a whole lot of groups like analysts, mutual funds, investment bankers, and institutional investors become interested in financial statements. Management and board of directors. In a company form of organization, the owners or the shareholders elect a group of people to manage the day-to-day affairs of the company. Since these directors and managers are ultimately responsible for the financial performance, they must periodically compile and report the financial statements. Financial information are also useful for decision-making function. Lenders. Banks, financial institutions, and other lenders would willingly part with their money only if they are assured of the repayment capacity, profitability, and long-term solvency of the business to which they are asked to lend. Financial statements are normally used by the lenders to judge for the financial health of the business and to assure themselves of the security available for the monies lent. The financial statements are also used to monitor companies' performance on regular basis. Suppliers or creditors. Suppliers of raw material or services are primarily interested in the short-term liquidity of the company. The financial statements facilitate the creditors in ascertaining the capacity of the organization to pay on time the consideration for the goods and services to be supplied. Customers. They can determine the strength and reliability of an organization based on financial performance. Legal obligations associated with guarantees, warranties, and after-sales service contracts tend to establish long-term relationships between a business and its customers. The financial statements are used by the customers to draw inferences about the long-term viability of the firm. Employees. Employees have an interest in the continued and profitable operations of the organization in which they work. Financial statements can be used as an important source for obtaining information regarding the current and future profitability and solvency. Sometimes, contracts tying remunerations to profits or payment of incentives based on certain financial measure would tend to magnify this interest. Government and regulatory agencies. The correct assessment of income tax, sales tax, excise duty, etc. takes inputs from the financial statements of an organization, especially to detect tax evasion, if any. Government, as the guardian of public interest, must also keep a close watch over the various business firms to detect profiteering and creation of monopolies. Vital information in this regard can be gathered from a scrutiny of the financial statements of business enterprises. National income accounting, used in macroeconomic analysis, derives its fundamental inputs from financial statements. The tax payable by the enterprises, as well as the compilation of countrywide statistics, is discerned using the financial statements. Regulatory authorities, like Securities Exchange Board of India, SEBI, Reserve Bank of India, RBI, Registrar of Companies, ROC, also uses the financial information to keep vigilance on the companies. Thank you for watching. If you enjoyed this video, don't forget to give it a thumbs up. I'd love to hear your thoughts, so drop a comment below. And most importantly, Hit that subscribe button and press the bell icon so you never miss an update.